you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. You really have to say, this is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what will happen, except that if you reason from first principles, you know that it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better. Let me lay out 3 possible ways to invest in Bitcoin. One is you buy Bitcoin, the underlying asset. The second is you buy the spot ETF. The third is you buy MicroStrategy. Okay, so we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put in place parallel custody, compliance, compensation, control systems. So that's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're getting the 1-to-1 correlation, for $1 million you put in, you're getting $1 million of Bitcoin. What's the positive? It's marginable, it's good collateral. I can buy in a second, no money down. And I don't have to build parallel custody, control, compensation systems. So all of my problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. Okay, so if I charge you 1% a year over the course of 20 years or over the course of your lifetime, it means that I take 20% of the money you invested at 1%. So there's a cost. 50 basis points means I get 10% of your money, approximately. So, but having said it all, I would pay you 50 to 100 basis points in order to be plugged into Wall Street. And it's not a problem. It's a lot better than the alternative, which is to rebuild all their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you could think of as a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call this an ETF, but because we're not a financial company, but we have $4.4 billion plus of Bitcoin and $2 billion plus of debt. So what we've done is we've levered the balance sheet with debt that costs us about 1.5% interest. Wow. So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have $4.5 billion of Bitcoin, but we don't charge $45 million.
Have you ever wondered how Bitcoin investment began its journey? In the beginning, Bitcoin was merely a digital currency. It was used for transactions, a new and innovative method of exchange. In those early years, its potential as an investment asset was not yet fully recognized. However, as the first Bitcoin transactions took place, they set the stage for future investors, sparking interest and curiosity. And thus, Bitcoin began its journey from being a mere digital currency to a promising investment asset. As time progressed, so did the ways to invest in Bitcoin. The first method was quite straightforward, buying the underlying asset. But as the crypto market matured, innovative investment vehicles emerged. The creation of a spot ETF, for instance, revolutionized Bitcoin investment. This option, with its 1-to-1 correlation, became particularly appealing to institutional investors, providing a straightforward and regulated way to gain exposure to Bitcoin. Then we have MicroStrategy. This leveraged Bitcoin company ingeniously uses its position as an operating entity to issue debt, buy Bitcoin, and generate cash flows. It's a more complex strategy, but it provides an opportunity to potentially outperform Bitcoin. Moreover, Bitcoin is not just an investment asset anymore. It has become a secure storage for high-value non-fungible tokens, or NFTs. This eliminates the risk of relying on external servers and offers solid security. Indeed, the evolution of Bitcoin investment has been nothing short of remarkable. What does the future hold for Bitcoin investment? Current trends are driving Bitcoin's soaring prices, including the US Federal Reserve's decisions, MicroStrategy's Bitcoin purchases, looming regulatory changes, and its emerging reputation as a safe asset. Imagine an investment vehicle that pays a yield instead of charging a fee, allowing for low-interest borrowing to buy Bitcoin. This could potentially create a significant yield difference over the asset's lifetime. The future of Bitcoin investment is as thrilling as its past, promising vast opportunities for those ready to explore. Let's hear from a financial expert, Michael J. Saylor, the executive chairman and co-founder of MicroStrategy. Saylor is known for his bold and strategic moves in the Bitcoin market, turning MicroStrategy into a Bitcoin investment powerhouse. He views Bitcoin not just as an investment, but as a dependable store of value, superior to traditional assets like gold and real estate. Saylor's unique approach involves leveraging MicroStrategy's position to buy Bitcoin and generate cash flows. In his words, if we have the ability to borrow money and buy Bitcoin, then we should be able to earn a positive yield on it. This strategy has so far proved successful, helping MicroStrategy accumulate over 100,000 Bitcoins. As for the future, Saylor remains optimistic, believing that Bitcoin will continue to rise in value. He foresees a world where Bitcoin becomes a global reserve asset, revolutionizing the financial landscape. In Saylor's vision, Bitcoin is going to demonetize gold, real estate, bonds, and commodities, and you're going to want to own Bitcoin. With insights from experts like Saylor, the future of Bitcoin investment becomes clearer. His strategy and predictions shed light on the potential path Bitcoin could take, offering a glimpse into the exciting future of cryptocurrency investment.
Saylor, what if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it.
Insane.
So if you were
If
you were pro Bitcoin, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So, right. So if you have $1 billion invested and you're getting a 2% yield, right, you're actually picking up $20 million a year, right, instead of paying $10 million a year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage, then the benefit accrues to the common stock shareholders, right? Because I went and I borrowed $2.2 billion at 1.5% interest, and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year?
Well, I really
let's say it
so.
was.
I really hope so.
If it was 15% a year, then we're scraping 14% positive real yield off of the debt, and so that would be 14% of $1 billion dollars or more. Actually, 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders. And every quarter, we can choose what to do. So some quarters we would issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity, other quarters we would just use our own cash. So the answer is there's always going to be a good market and there's always going to be a bad market, right? There are things you shouldn't do and there are things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, that it should basically correlate 1-to-1 with Bitcoin after you pay the fee, then you buy a spot ETF. But if you wanted to actually try to outperform Bitcoin, like MicroStrategy's outperform Bitcoin, our performance over the course of the 3 years is higher than Bitcoin performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets and we sell $1 billion of equity, we actually capture $300 million of accretion to our shareholders, you see.
In the dynamic world of digital finance, acquiring the right skills is crucial. Whether you're looking to amplify your crypto portfolio or level up your crypto DeFi and blockchain knowledge, extraskills.courses is your ideal guide. They offer practical guidance to help you traverse from novice to professional in this exciting crypto journey. Take a moment to appreciate our sponsors.
Welcome to the future of finance with Extra Skills crypto courses. Our seasoned experts, veterans of the crypto game, are here to decode the complex world of cryptocurrency for you. Our comprehensive courses cover everything from blockchain fundamentals to advanced trading strategies. Here's the catch. We're offering a limited-time exclusive discount on our crypto courses. Get access to these invaluable resources at an unbelievable discount of more than 50% off. Hear it from our students who've already transformed their financial futures. I turned a small investment into a profit machine. Thanks to Extra Skills, I'm not just trading crypto, I'm trading success. Don't wait, the crypto market never sleeps, and neither should your ambitions. Click the link below to access our exclusive crypto courses. But wait, there's more. We urge you to take advantage of this incredible offer. Click on the link in the description below the video to get these courses at a discounted price. Don't miss this Extra Skills, empowering you for crypto success.